Welcome back to ICT Trading Concept. So after some days I come with this video, and in this video I'm gonna repeat the same thing what I'm talking about for last 2 to 3 weeks. Okay, so this should be the simple idea, and if you just use this with the rules you can easily get near about 100% winning rate. Okay, so let's go to the video. I always spend time with the introduction. I marked this one as my 15-minute fair value gap, and you can easily mark this gap. Look at the price over here, it went higher. This is the last fair value gap. Okay, just look over here, there is no other fair value gap below this fair value gap. So this is the last fair value gap, which is in my opinion the breakaway gap. And this is the 15-minute chart for Nasdaq. Price went higher and it has traded all of this area. I am not interested to talk about all of these things. And when actually price came back over here, it tried to respect the 15-minute fair value gap and then failed. Instead of that, it went lower. It went through this 15-minute fair value gap. Okay, now this 15-minute fair value gap will work as a inversion fair value gap. I would like to show you the equal lows, this low and this low. They're very clean lows. Okay, if you ever seen this type of clean lows or highs, you will mark them as your drawn liquidity. I do this all the time, and this is the best idea for me to mark the drawn liquidity. Okay? So this is the sell side liquidity, and I am just using the reply mode so that it will be easier for you guys to understand how price actually react. Okay, so I will go to the 15-minute 1 minute chart. Just remember, this is the 15-minute fair value gap from the lowest fair value gap. Okay, that means if price would like to go higher, it should have been rejected from this fair value gap. Below this fair value gap, there is no other barricade to hold the price to take the sell side liquidity. There is another equal lows. I'm not interested about this low now. I will talk about these lows. This very clean lows. Okay, so just be with me. I'll go to 1 minute chart, and I'm just using the replay mode. If you look at the price from here, when it went through this 15-minute fair value gap, it has been rejected from the consequent encroachment, and all of you know how actually we predict. Let me just mark this one. So if there is a fair value gap, and if you see, price actually went through this fair value gap. This is the candle. Okay, price actually went through this fair value gap. Our expectation should be it will be rejected from the consequent encroachment, and then it will come back to the lower part of this fair value gap. We will take our sell over here, and it will take the sell side liquidity. Okay, so that is our overall expectation, and your stop loss will be above the high, swing high, and the low. Okay, so that should be your expectation. The way you will trade the fair value gap. Now let's go to the price. We would like to see what happened over here. So there is the rejection from the consequent encroachment, but I'm now in 1 minute chart. Don't forget that. But price actually get the rejection from the consequent encroachment, but it failed to go to the low part of this 15-minute fair value gap. So there was no entry actually. So I was waiting. Market went all the way here and has made the sell side liquidity. The relative equal low. If you remember from 15-minute chart, this is the relative equal low, very clean low. And then it started to go higher again. Look at the price over here. It actually went to the low part of the 15-minute fair value gap. So what should be your entry? You have to take your entry over there, and you have to put your stop loss above there, above this swing high. Why? Because if you saw there is no high that is above the consequent encroachment or the highest high, then you can't put your stop loss over there, because price can go above this high and it can take the liquidity again, then it can reject it. Okay, that's why you have to put the highest highs, your stop loss to the highest high. Okay? And it's gonna be like near about 70 handle, and that is huge for me. I'm not interested to take this entry. I will wait for further price action over here. Let's go. So price went little bit higher again, and then it has just come to this fair value gap. I'll mark this fair value gap. So if you remember, I marked this fair value gap from 15-minute chart. I'm just marking this fair value gap as well as the same way from the 1 minute chart. So this is the lowest fair value gap. So if price would like to go higher and take the buy side liquidity, it should be reacted from this fair value gap. So I'm not interested to take the short, because I would like to see how price did react over here. It would like to go higher and take the buy side liquidity, or it really want to go lower. Okay, so price actually went little bit higher. Look at over here, it has failed to take the buy side liquidity. Right now this is the buy side liquidity, so it has failed to take the buy side liquidity again, and instead of that it has given me the market structure sheet. Now I am interested to take my short. This is my market structure sheet. From the beginning, you know, I'll just remove this lines so that there won't be so many lines. From the beginning of this video, you know that when price will come to the low part, I will take my short and I'll just go for the sell side liquidity. But as there was a very big buy side, stop loss, so I avoid that entry. Instead of that, I was interested to take a look for the further price action. And here it is, when price went to the lower part of the fair value gap, it came back to this fair value gap. And if this fair value gap is strong enough to hold the price and send it back to the buy side liquidity, then I am not interested to take my short. I will wait for further price action. But what happened over here? It came to this fair value gap, failed to take the buy side liquidity. Instead of that, it gave me the market structure shift with a very clean fair value gap. Look at this fair value gap. It's a very clean fair value gap. Okay. So from the beginning, we are interested to take short because this is our sell side liquidity, and it actually gave me this market structure shift with a very small stop loss. Okay, so I am going to take my short if price can come back to this fair value gap again, and I will put my stop loss. I will put it above here because that will be easier for you guys to put your stop loss, and my target will be this sell side liquidity. Okay, so let's see what actual price did, and it went a little bit lower and there. Okay, I am already in the market. I'm already in the trade. Okay, it tried one more time to go higher, and then it actually started to break lower. Now there is something else I would like to show you. There is a breaker. This one is breaker, low high, high low higher high. Okay, so this breaker, I will just mark the high of the breaker because that is interest. I'm interested of that. This is the high of the breaker. If you see the high of the breaker, nobody closed above the breaker. Okay, so this is the breaker. I'll just remove the line because that would be so many line over there. So this is the breaker. Okay, and this is the low of the breaker, this is the high of the breaker. So I have just marked the high of the breaker, and I was trying to read the price. If it can break the breaker high, then maybe this time I am wrong. It will go higher again and take the buy side liquidity, though the price action was telling me that I would like to go lower to clean sell side liquidity. Okay, so there is one thing, and there is another thing is I have the order block over here. So that is my order block. Price actually went above to that order block level and then rejected from there. Now it started to go lower. Okay, so there is another thing I should show it to you. This is the sell side liquidity as well, because you see this low and this low, they are relatively equal low. So this is the sell side liquidity. If you take this entry over there, you have to take some partial over here because there is clean sell side liquidity with a very nice fair value. This is also a very nice fair value. So price can reject, price can come here and then started to go higher. It can do. Okay? So you have to take some sell side liquidity below this equal lows, and also depending on this fair value. So finally, actually, it has taken the sell side liquidity, and if you look at the risk reward ratio, it's near about 1:5. If I would take my entry, actually, I took this entry. I have uploaded this to my Twitter. My stop loss over there, but I wanted to put my stop loss over here, so that would be 1:7 risk reward ratio. But it's a very good entry, and this type of entry actually works most of the time. 90 to 95% of the time, I get winning percentage from this entry. Okay, so the simple thing is you have to mark the breakaway gap from 15-minute chart, and then you need some kind of, yeah, price should go through that fair value gap, then it should be rejected from the consequent encroachment. Then when it will come back to the lower part of the breakaway gap or the inversion fair value gap, whatever you say, then you will wait some kind of market structure shift and fair value gap. You can take this type of entry, and if you have the clean sell side liquidity, most of the time, I mean 90 to 95% time, you will see the profitable trade. Okay, so that is the thing for today's video. I hope you will enjoy this video and you will practice this. And if you are new, please subscribe to my channel, give me a thumbs up, and share my videos. That will be I'll be grateful to you guys. So that's all for today. See you guys. Bye bye.